Hello. How's everybody doing? So I hope everybody's having an awesome weekend. This is 50 pips in the house, 15th 06 2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosures, disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on going into the week? Well, keep in mind, this is going to be an interesting week. As far as Monday is pretty much a dead day. Going into Tuesday, we've got some UK data, but really it's all going to be about the ZEW, where if we still stay in range on Euro, Tuesday is really going to be an interesting day if we're going to take a stab at those lows or reverse outside of the range. Then Wednesday, we've got the MPC for UK, but really it's all about that FOMC press conference. We do have some of the S&P on the wires on Thursday. We have some unemployment claims out of the US, and we do have more data, but really the week is, first place all about that FOMC, maybe Tuesday for Euro with the ZEW, but, it's all about the FOMC statement. And this is an interesting one because we got this 2-day meeting. So it's going to be important. We could really see some moves. So that's what to focus on. So in terms of the charts, let's go through these things quickly. Let's try and keep it as sweet, as simple as we can. So what's going on the ES? So the ES, we talked about this press above the 1900, and the fact that it was holding above 1900 was still bullish, holding a bull tone. We were not interested in looking for major shorts, but the only thing we're eyeing were tactical shorts to try and trade retracements to the upside. We're clearly not going to be buying highs, even though this seems to be fairly well bid. And if we continue like this, I would not be surprised to see this move back into 1975s or the 2000 levels sometime this year. At the moment, again, we don't have any crystal balls, so we're just focusing one step at a time. And as we're going into the week here, the focus remains on how we're going to behave early on and through this FOMC around this 1925. So the range we're looking at now are those 1950s to the upside and 1900 to the downside. Those are the two big pivotal levels. And again, there were some very nice shorting opportunities this past week. So keep an eye on how we behave here. Hold above 1925s. Those highs will attract. Failures at highs will be very interesting. Shorts hold below, daily closes below 1925. Those 1900s attract. What I'm looking for to see some kind of a break outside of this relatively slow trade is post that FOMC to see daily closes above 1950 or below that 1900. Again, no crystal balls. Let's see what happens. Let it grind and still look for tactical opportunities is the way we're focusing on this, okay? In terms of what else we got on the future side on gold, well, gold pretty much we talked about the fact that 1250 was going to be really important and that it was going to be the pivotal level, and we would not be looking to get aggressively short below that 1250 because it was looking to us as though we're going to have to rotate back into that 200 DMA back towards the 1300, right? So at the moment, we had a discussion about range shifts. The range we're still looking at right now is 1250 downside, 1300 mid, and 1350 upside of the range. So right here going into the week, the level we're going to be looking at as pivotal level is that 1300, which will be defended by, that 200 DMA will come in as a defense of that level. But keep an eye, that hold below there, heavy tone, possibly go back to that 1250, hold above, then we expect 1350s to come into play. We're still looking for this to trade with fairly bid tone. We expect this to try, at least in the early part of the week, to get some upside Momo, and we would continue to expect to see upside Momo rather than downside Momo on gold. Similar things going on silver. We talked about all these moves into these low ranges, and we said that these were interesting opportunities to fade these moves to the downside, and that unless we got daily closes through that 1820s, we talked about those 1950s, 1960s attracting on a move back into those 20 levels. So that's pretty much still in play, right? As long as that level holds, we expect this to try and move back into those 2045s, 2050, and that's really going to be the pivotal level for the week, even though, you know, silver's not really the focal point. You know, it's been trading fairly heavy. The focus is more on gold and silver, but a lot of people were talking about that and were asking about silver. In terms of crude, not a lot has changed, and again, got a lot of slack on Twitter in the past weeks for this, but, you know, still looking, we're looking for a 105s, 108s, 112s, and possibly a much bigger move, right? In terms of the bigger move we're talking at, you know, if you go back, even look at it on a monthly, you know, this is what we're discussing. We're discussing this move that came all the way back down. We've been discussing this pretty much since for a couple of years, you know, this move back down, and the fact that we kept on getting a whole series of higher lows here, right? You see this 200 here on the monthly, but basically this move up and this continuation, this higher lows that keep on building, right? And we're talking about this possibly being the start of a big cyclical move that keeps on playing out, and that could see us with crude trading all the way back, possibly even into the 133s and those highs. You know, we don't have a crystal ball. We're not looking that far in advance, but this is what we're looking at from a cyclical perspective, okay? From a shorter term perspective, there being a lot of trading opportunities around that 100, 200 to keep on trading this to the long side and look for moves higher. And the most recent one has been this move, lows to highs, right? And, you know, guys who follow these updates and the blog are familiar with this move. Let me just get rid of that. Let me draw it again. So those lows off those highs, when we came back into this 50 back that held where the 200 held, and, you know, started again getting this repeated move here, higher lows. We got the 100 coming to move back above. Sorry, that was the 100 on the monthly. The 100 coming back above the 200. Very aggressive move through the 105s. 123 extension is the 108 and 112. So if you're wondering about 105, 108 and 112, those are the levels. Basically, we're just looking at these longs to complete back into the 0, 123 and 150 extension. There's no magical levels. It's just the fib move. Okay, so no change in outlook. We're still looking at that move going into the week. What we'd focus on is 105s now being pivotal, right? As long as we hold daily closes above 105, strong bid tone, daily close back below 105, we could see a bit of retracement, but still we're looking at this to continue to try and rotate higher, okay? A lot of people asking about CAD. Really, I have no interest in CAD whatsoever here. We're stuck between these two moving averages. We've got the 100 to the upside and the 200 to the downside. This is a daily chart. And yeah, we're moving into some kind of support here. But again, I think as long as we're stuck between these two moving averages, even though this is looking a bit heavy, I don't have a lot of interest in this. I'd say sideways chop, not that interesting in terms of the chart. In terms of Kiwi, again, we're in that move, right? Move back into that 100, 200 support zone, confluence with the 50 back of that move from lows to highs. We're coming back, and now that this level is holding, right, we talked about the 85. As long as we're holding above these 85, we're looking for this to try and rotate back up into that 0 level and possibly break through into the 89 to 89.70. So this move is in play. Clearly, you know, would it be healthy for price to only move in one direction and only move in a straight line? Absolutely not. What a healthy market is to see price moving up and down, right, with retracements. But right here, especially after the RBNs and Z, you know, it looks like it's going to continue to hold bid tone. So expect to find some buyers here. This will be base support. This will be the pivotal level going into the week, and the focus is going to be that upside level. And, you know, similar action is happening on Aussie, where it's still trying to coil to the upside. I don't think it's a particularly interesting chart, but as long as it holds above those 93.30s, and we've talked about those for ages, it's still got a bull bid tone. So those 93.30s are really pivotal. Clearly, it's dangerously close to that resistance, so it'll be very tempting for the market to go and take those stops out. And what will be interesting is to see how the market behaves, you know, if it fails or if it finds new buyers at highs there, but not charts that are particularly interesting to me. In terms of USD JPY, you know, it's all about that base support, right? Is it going to hold the support? This is a weekly chart for that continued rotation higher, and it's in a dangerous level because it's just coiling, and we could get some whippy action. But you know, that base support is still holding. If you're looking at it on the daily, you see that it is finding resistance in that shaded area, but that 200 DMA is still supporting. So again, I just think it's very choppy around the 102, 101 inside that 100 pip range. And I think that the longs have already made their bed and the shorts have already made their bed. That's why I think inside that range it could be very choppy as short-term traders, as tactical traders might get chopped around or whipsawed around because the bigger players have most likely already made their bed and are just waiting for the market to resolve one way or the other. Okay. In terms of, let's do cable and then let's do euro. Cable, again, very nice move, and guys are familiar with the blog, and we've been talking about this whole 4 hour, you know, on Twitter, we've been talking about the box, So once we came back down into this 50 back here, which holding again this whole box where we kept on getting these positive closes on the 4 hour that was supporting well ahead of this support here, you know, it just kept on basing. And what we said, as long as this box holds, you know, it's not a super high odds in terms of a fib, but it's a very strong support, right? And as long as we keep on getting these reversal candles on the 4 hour, you know, it looks like this is bid and it's probably going to try to take a stab higher, right? Then we pop back in and we said, you know, 68.50s into 67.80s is a chop zone. Daily close outside, you'll likely get some Momo in that direction. We closed below, that's where we got the Momo, bam, into the box, previous resistance acting as support, and bam, then thanks to Carney, we move back up. Daily close above, daily close below, get some Momo, daily close above. There we are, we got some Momo. So right here it's holding dangerously close to those highs. You know, this kind of action, you wouldn't be surprised to see some kind of a gap open, or at least the market try to take a stab at those highs again. Keep in mind, it's not healthy for the market to only move in one direction. So if it's going to break higher, it doesn't mean it has to break from here and that it can never go down, right? So this move we're looking for, especially if we break higher, we're looking for a move into 170, 120s. That hasn't changed for a while. Going into the week, you know, don't get chopped around at highs. You don't want to be the last, even though we expect this to, it would almost be surprising. Well, not surprising. I don't like the word surprising, but I think the odds are that we do take a poke, another stab at those highs. But, you know, don't expect it to have to do so straight away. So what I'd be looking at, you know, any kind of retracement here, as long as it doesn't break back below this spike high, this resistance, I'll probably act as support coming into pre-mine these 69s or something. You know, if we get a 50-60 pip pullback, you know, as long as that holds, this is still going to have a nice base support to continue to break higher, right? And if we break higher, you know, the next level are those 71.10, 71.20s. That's what we'll have to keep. But again, don't expect, you know, you don't want to be the guy who's missed the whole move to the upside and you just wait to get a tiny 2 pip break to the upside and get long like a crazy man or a crazy woman, right? You know, always try to keep the odds in mind and don't get greedy on the moves, right? Keep in mind that it's much better for everybody to see a healthy market, so you want to try and play on that side. So let's see what happens, but it's clearly all about those highs. As we go into the beginning of the week, you'll have a lot of players gunning to try and take those stops out and press higher, and you'll get a lot of people looking at all kinds of reversal patterns, looking for those highs to hold and to play the short side, not necessarily for a huge move. A lot of people will just be looking maybe for a 20-30 pip move to the downside, then to reverse long too, you know. So there's a lot of wheeling and dealing around this level. And as we go into Monday trade, not a lot of data. There's pretty much very light data calendar. You know, you don't want to go over trading, you know, and getting chopped up. You know, let things settle a bit. Mondays are always a bit of a funky days, okay? And what's going on euro? You know, in euro, we've talked about the fact that it's just much to do about nothing, really. It's hovering inside the support zone, right? And we talked about the fact that basically these 35.60s into these 34.74s, 34.75s is a base support. And as long as we don't take those lows out, it's going to be difficult to see more traction to the downside, right? A lot of people are getting a bit obsessed about the ECB low. It's an important point, especially because we've got all that protection of the 35.00. But as far as we're concerned, the real support is coming in at 34.74. So this is all the shaded area is a big chop zone, right? And the way we're looking at it is daily close below there. We could see some very aggressive selling coming back into the market again, all the way back into 33s, 32s. If we close above, then we'd expect to see a move back into 3640s, 3660s, and then that's going to start to be a bit more interesting. You can look at the previous recordings, right? But that's where we're staying. So again, as we said, not a lot of people were wondering why you keep on saying nothing's happened, because there have been moves. Well, we're talking about the Thursday Friday range. After we went through that ECB and on-farm payrolls, we put in this range, right? And what we say is, post these events, as long as we're stuck inside this range, of course, you can make money to the upside, you can make money to the downside, you can be flat and just watch. But the bottom line is, for the market to get, the market needs to attract new sellers below that Thursday, Friday range lows, or it needs to attract new buyers above the high of that. As long as we're stuck in that range, it's still a range play, right? It needs to get daily closes and Momo outside, if not, it's just going to continue to be a range play. And what that means is that after that kind of event, when you're pressing back towards the highs, the odds are that you just fade the range. You're looking to sell presses back into those rides. You're looking for this range to hold, especially when the following days we didn't have a lot of data, nothing to do. When it comes back down towards the end of the range, you're looking to fade the range, get long to the downside to play moves to the upside, right? It doesn't mean it can't go higher. It doesn't mean it can't go lower. But when there's not a lot of data in the market, and after there's been a lot of volatility, it's not surprising to see the market globally stay in range. Okay, so that's pretty much what we're looking at going into the week. Hopefully it'll be an interesting one. Don't despair all the people that are saying we're not getting enough volatility. The market moves in cycles. Sooner or later we'll start to get volatility, we'll start to get the market moves again. It's just normal trading. A lot of trading is patience, waiting. We don't always have to have moves. We just have to be patient and be in a position where we're focused and ready to take advantage of moves if we think they fit our requirements or our risk rewards rationale, or parameters, right? So I'm wishing everybody an awesome rest of the weekend wherever you may be. I hope you enjoy the content. Again, if you like it, you can share it, whatever. If not, I'll just see you guys around on Twitter or in the next update. Have an awesome one. I'll post the recording. Take care, guys. Bye bye.